Okay, welcome back to my next podcast with Alexei Natenkov. We're gonna talking about the real estate, about the deals, how you can get some tips from successful entrepreneurs, from successful investors, then invest in real estate, multifamily apartments buildings. I'm wanted to share with you this information. I'm in VIP investor real estate club now, and this big giant group in real estate. Then I wanted to share with you. I pay money for be there, and this is VIP club, so it costs money. So you understand this is a lot of value for the people who start, or maybe you're successful investor in real estate, and you wanted to know some maybe mistakes, maybe someone do it some deals and they have some questions. These questions is gonna be pop up here in this conversation. So I hope so you enjoy and you appreciated this value what I provide for my audience. The minimum what I waiting from you is just subscribe, share, and comment in the comments below. And I hope so you appreciate this value, because this is information you cannot to find anywhere. It's be around the successful entrepreneurs, be around the successful investors, and talk about the deals, talk about the money, talk about the lenders and how you can finance the deal, what kind of problems you have, and how we can help each other. So this unbelievable information. So I hope so you enjoy.
I've got a question. I've got a deal. It's 593 units, and it's 100% vacant, but it's listed about 50 cents on the dollar because it needs a lot of work. And I know Grant is all about cash flow, and this doesn't have any cash flow at 100% vacancy.
Right.
But it's way below cost to build.
Of course.
So I literally just sent it over to deals at Carbon Capital. They haven't heard back yet, and I'm really just trying to find out, are they even going to consider something that doesn't have, that, is 100% vacant?
Well, look, so where's the deal at?
It's in Tulsa, Oklahoma.
Tulsa, Oklahoma. Okay. How many units?
593.
Oh my God, 593 units and they're all vacant?
Yes.
Man, I would have run from this thing. Why did it get condemned? What's the issue with it? Where's the hairballs?
They had a freeze 2 years ago. Burst all the pipes, flooded everything. All the water damage has been remediated. It's been dumped down to the studs.
Yeah.
It needs to be put back together, and that's it.
Yeah. How much do they want per unit?
50,000.
Okay. How much do they buy it for?
35 million.
How much per unit though?
Oh,
Well,
I don't know what that per unit is.
Yeah.
50,000 per unit is 30 million. So they're asking 30 million. They pay 35 for it.
Yeah, I mean, and they probably bought it when it was full. So again, the here's the issue: is you got to buy it for 30, and you got to underwrite the deal under a pro forma because you got to do a bunch of work to it. So I would run. I wouldn't waste any time on this deal unless they were going to give it to you. Unless they were going to say, hey, look, here's 100% of the loan financing. You're not putting any money in. Maybe you're putting in $2 or $3 or $4 million to start getting these units up and going and ready to go. But they're going to have to give that property away. Nobody's going to go and buy that for 30 or 40 million bucks unless they know the market. They have patient money. Their investors don't need cash flow, and they have 100% complete conviction that with it's done, all said and done, that they're not going to have any more issues. The problem with this big floods and nobody living in there, wise and powerful Steve, is that what happens is you start getting a lot of other issues when people don't live there. It's like an airplane, a car. When you don't drive it, you start having all these other issues. So look, you got to rip this thing, have them give it to you. If you want to get really, really super creative on the deal, that's great. But I wouldn't get in their system and be like, oh yeah, yeah.
So they own it fee simple, and he's willing to carry $20 million.
Well, he's gonna have to carry all of it because he ain't gonna get $10 million out of a deal that's vacant. And my question to him is, why is he not going back and putting it back together to start getting the cash flow? Because he knows if he's a real investor, he knows that the most important thing in multifamily is 1,000% the cash flow. That's it. That's it. That's it. If it don't cash flow, what does GC say?
Don't go.
No go.
No go. Unless you're ripping that thing. Unless you're ripping it, and when you rip it, call me. So just say, look, you're crazy, man. No one's going to give you 20. Are you willing to give me 35 million? You want? Look, tell them this. I'll do all the work for you. I'll take all your problems. How about this? How about I buy the deal for 35 million bucks? You give me the note for 30, and then you give me future funding for 5 million. I'll put the whole thing back together, and then I give you 20% of the upside. Whoa! What happened there? What happened there? What happened there? Now he's got to come up with 5 million to do all the work too. But now you're just sweat equity. Maybe he just wants to give up. Hey, I'll buy the deal for 35 million. I want $30 million as a note, and I want to make any payments for the next 16 months, and then I want 5 million future funding, and then I'm going to give you 20% of the upside as well. When things all said and done, we can go and sell this thing for, I don't know. You got to underwrite the deal and come up with that valuation. You like that?
Yeah, it'll roll about 64 million.
Okay. You hope. You think.
Yeah.
You're going to be preying on that property. I promise you that.
I'm a general contractor by trade.
Yeah, no, look, some of these opportunities, if you set them up the correct way, some of these opportunities are an absolute home run grand slam because they don't want to do the work anymore. Does that help you?
Yes, perfect. I like it.
All right, cool, awesome. Thank you. Let's see, I'm spotlighting, it was Steven. Veronica, I think I already did James. Great, how are you?
Good. I just had a quick question. It was on, I think it was last week that it was a real estate buyers Q&A that was posted on YouTube. They were talking about somebody asked a question about the cap rate, like per city, and then Grant was mentioning that it would be on the instant underwriter calculator, but that doesn't seem to be true on that. So I'm assuming the next best way is really just asking brokers, top brokers in your market and top investors in your market is maybe the next best way to find that per city, or just want to know your thoughts on that.
You're talking about cap rates, how to find like the ideal cap rate to buy a deal at?
Yeah, like per city, per market. So I'm assuming it's just based on just top brokers, top investors in your market is the next best way to do it, because
that's right.
It's on the instant underwriter.
Yeah, so Steven, the instant underwriter is not going to have the cap rates for each market, because you guys got to remember the cap rate is based off of the market, number one.
Exactly.
And then there's a couple other variables that I want you to start thinking with too, Steven. The cap rate goes up and down based on the quality and the class and the location and what investors are willing to pay for the property.
Right, supply.
But out of all of that, out of the market, the location, all that stuff I just said, probably one of the most important things that drives cap rates is debt.
Yeah.
I'm going to repeat that. One of the most important things that drive cap rate is debt. When your debt is at, Steven, right now on your debt quotes, what are you getting debt quotes at for a 100-unit multifamily complex?
I'm new, man, so.
Okay, well, I'm just asking you so I can gauge out where you are. And this isn't like a right or wrong. I actually just want you to be a part of what I'm saying, my answer. So when you go get a debt quote right now, say I'm going to go get a debt quote for 100 units, right? Right now it's going to come in around 6%. Well, 2 years ago it's coming in around 4%. And so what happens in the multifamily space is that you want a thing called positive leverage, meaning that you want your debt to be below the cap rate. So where are you from, Steven?
I'm actually in Boca. I'm really close to your 10X Boca. You guys, what a deal you guys got.
Oh, well, 1,000%, and we continue to buy those deals. And we like for example, that 10X Boca deal, we bought that for, I don't know, it's probably a 4 cap or a 4.5 cap rate, but it was brand new from the developer, needs no work, Class A, 10 out of 10 location, right next to Fresh Market. But you go right down the street, or you go anywhere that's 1970s, lower rents, needs work, subpar location. It's probably, back then it was probably a 5 to 5.5 cap, right? Mm-hmm. So as the quality goes down, the cap rate goes higher. But now, since debt has gone up from, call it 3.5 to 4 to 4.5 to 5, all those cap rates start getting higher. Right. Because people don't want to go negative leverage, meaning that your debt is here and your cap rate is here, because that means that your cash on cash goes down. So Each cap rate is a little bit different. What I'm seeing right now, high level, again, this is just high level, guys, okay? In these really, really good markets, people are still willing to buy cash. That's if they're buying cash. But most people right now want between 5.25 to 5.75 for really good assets with good debt. And then as you start working down, buying shittier product, Class C, lower end stuff, you want those deals more for cash flow. So if your debt's at a 6 and your cap rate's at a 6.5, well, now you're achieving a 7.5 cash on cash. And so the higher your cap rate goes up, the more cash flow you're going to be able to provide to your investors. So that's just kind of a gauge. But whether it's Arizona, where it's like a 5.5 to 6 cap, whether it's Dallas, it's a 5.25 to a 5%. Some people are just buying based off of the value of the real estate. To Alabama, is probably at a 6 cap. Because again, you have primary markets, you have secondary markets, and you have what's called tertiary markets. It just means 1, 2, and 3. The 1 is lower caps, 2 is a little higher, 3 is in theory supposed to be a little higher as well. Just depends on the growth. Does that help?
Yeah, for sure. I just it just threw me off why he mentioned that on there. So then I looked, I was like, that wouldn't make any sense why the underwrite calculator would show it that, because you would have to really count the cap rate first.
That's right. That's right. But Stephen, you made a great point at the beginning. Is when you're getting into a market and you're talking with the lower brokers from like Marcus and Millichap to IPA to Newmark to CBRE to Walker Dunlap to all the brokers, you're going to ask them, hey, what's your market cap rate trading for? And so now you start taking notes. Like I take notes, right? I have a notepad everywhere I go. This guy says the market's a 6. This guy says it's 5.5. This guy, I called his partner in crime. He says it's a 5.75. Well, somebody's lying. Somebody's telling the truth, and then somewhere in the middle, that's where you actually end up figuring out where that trade's going to happen. I hope that helps, Stephen.
So that's where the follow comes in. I think I have that Excel sheet as well. So like the deals that you miss out on, just go back, see what it sold for. I mean, it's kind of more just trial and error for learning the market that way too.
That's right. Yeah, and look, I mean, again, I said this before. What is your going cap rate, and then what's your debt? Because once you put debt on this deal, that's actually what's going to determine your cash on cash and your investors. That's the most important number. Next question is coming from Curtis. Curtis, how are you?
Yeah, good, Ryan. Thanks for taking my question. So, knowing where interest rates are, where the direction that they're heading, are you guys looking for, and obviously each deal is a little bit different, but are you guys looking for shorter term financing, 3 to 5 years? Are you still looking to try and get out longer term, 10 years and out? Depending on what I'm looking for is value add properties that we can force feed market appreciation through bringing market rents. So we're thinking we want to be more along the 3 to 5 years to refinance to take that cash back out, but I'm interested in your thoughts.
Yeah, look, I'm a lot like Grant. We did a few deals that were short-term financing. I honestly think that more runway and more length of time is beneficial, and you can always do a supplemental, right? So I like and I lean more towards the 5, 7, and 10 with flexible prepayments. I think if you look at the 5, 7, and 10, the treasury, like the 10-year treasury is at like 4%. You add on the spread of 150, your own rate's like 5.5%. If you're doing short-term rates, it's still at like 6, 7. You still better buy these what you call a rate cap. So I think 5, 7, and 10 years. We used to do a lot of 10-year. 55, 60, 65% loan to value. And we would get full term IO. That's just the way that as a company, we're always like, okay, even when you're doing value add stuff, right? Sometimes you can get future funding. Sometimes you can buy a property, full term IO, in 2 years, or as long as there's like 5 or 7 years left on the loan, you can go to the supplemental. So some of these programs would actually still work for what you're trying to achieve, but you can lock in rates because, look, guys, if we had a crystal ball saying rates are going to come down, I do think rates are going to come down, but I also think that there's 2 different types of rates. There's the short-term rate and there's the long-term rate. And I've always been a long-term buyer, and so that's why I always lean more towards the long-term financing. So, again, I would get quotes for 5, 7, and 10 with flexible prepayments, and then if you want to refinance or get a supplemental, just know what those options are because a lot of the deals that we're all buying right now may not need as much work as we thought or we were going to do because maybe right now you're buying a deal that was either already completed or it meets inside that market where you're not the highest but you're not the lowest, but you can cash flow that thing at 7, 8, 9% and the investors are happy. At a certain point in time, guys, you don't want to buy real estate to work. You want to buy real estate so it works for you.
Yeah.
I just had a meeting with Grant, a broker in a group that has not a lot of units, almost 100,000 units. And one of the things that he said is he's like, hey, look, it's a lot of work. When you go and do value add, when you go and do units, when you go and do the whole like fix and flip, he's like, it is a lot of work. So I would say to you is like, if you can go and buy a B-class unit, what market are you in, Curtis?
Well, I'm in New York, but I'm not looking in New York. I'm looking in the Sun Belt area, like South Carolina, North Carolina, Tennessee.
Love those markets, and there's a lot of great opportunities right now. We had a portfolio. Actually, somebody was asking me the first investment that I did with Grant was 826 units in Nashville, Tennessee. Love that market.
Yep.
What I will say is we bought a workforce housing kind of portfolio where it was like, you can only do so much to get the rents to go up because that's what it was. People wanted $8,000, $9,000, $1,100 rents, and it was a great portfolio. We made a bunch of money. And, you just got to figure out what market you're in, how much can rents really grow. We're actually looking at rents right now flattening off. Like unless you're buying something from a guy that owned it for 25 years and rents are like $650 and the market actually 1,100. But a lot of the stuff has already been flipped over, turned over, worked. And so I would just go in it saying, okay, look, if it's flat for the next 5 years or 7 years or 10 years, everybody's good with 8% or 7%. And so I'm going to buy it, bake it, and move on to the next. Because really, guys, one deal will change your life, but it's really the scale. It's really the scale that creates a real company.
Right. Thanks, Ryan. I appreciate it.
Yeah. That's a long way to say longer financing, 5, 7, 10 years. I always like 7 and 10. You're getting 5.5%. Put more money down if you can. Full term IO. That way your returns are consistent across the next 10 years, and investors like consistency.
Got it. Thanks.
Okay, next question's coming from Floyd. Good to see you.
And Ryan, I see a lot of people asking about, where to find deals. I did mention the deal finder on there, so I don't know if you want to give them a little info on what that is, so that everybody knows that that's also an option that they have.
Yeah. Well, the deal finder it's a platform where you can go and put in the addresses, and you guys can find deals in your marketplace too. So if you have a link for it, Veronica, you can always post it up there. There's no one-stop shop. I didn't use CoStar for the longest time. As the portfolio got big enough and we started, wanting to build lists and do more stuff, that's when I got CoStar. But it costs, $500 to $3,000 plus per month. So it's really just based on your guys' budget. Floyd, go ahead. You got a question?
Yeah, I'm looking at a 44 unit deal.
Nice.
And
Good size.
my primary question really had to do with is Grant interested in assisting with syndicating for down payment, or is he more inclined to go with the partner on profit sharing approach?
Well, it's. Let me. What are you trying to solve for? Are you trying to solve for a down payment? Because that's what this is.
Yes.
So the group here is like, okay, Floyd, you found a deal. It's 44 units. Love the size. What market's it in?
It's in Louisiana, Northeast Louisiana, Monroe.
Monroe. Okay. Don't love the market. Maybe not a bad market. 44 units. How far do you live from Monroe?
About 5 miles.
Okay. Are you going to manage the deal?
Well, I don't really want to work it. I know how to do that if I need to, but I probably need a property manager.
Yeah. How much is the deal?
They're asking 2.9.
Yeah.
And it's from a guy that's had it forever. Actually, he inherited it about 10 years ago from his dad, who'd been around actually has a reputation. His dad passed away.
Yeah.
And so the rents are low. It's scalable, which is what I like about it. The rents next door, fixed up after a fire next door, are pushing 800 for a second. These are all 2-bedroom, 1-bath apartments.
How much are these rents?
Well, according to year 22, it was $283,000 a year. So that works out to be around $535, $550. It easily could go to $650.
Okay, it doesn't matter. Here's what I'm asking. Okay, I'm going to help you. Floyd, what you need to do is, Is it listed? Are you direct to the seller?
It's listed.
Okay.
I found it on Zillow. I see it on LoopNet. It's not showing up as available yet on the Deal Finder.
Okay. Well, that doesn't matter. Call the broker. Yeah. Call the broker and say, hey, why is this guy selling? Why now?
Yeah.
All the stuff that we keep going over, guys. I promise you, you just follow these steps. Floyd, it don't matter if Grant or whoever. Like I will, or Eloy, or Maurice, or Jana. We'll all come together and get the down payment, but you don't need to worry about the down payment or the equity right now. What you need to worry about is the deal.
Yeah.
Okay.
Okay.
The most important thing is the deal. Call the broker. Reach out to the broker. Say, hey, why is this guy selling? And then I want you to just start asking these questions. It's in Monroe, Louisiana. It's not a highly turned over market, so your competition is going to be Dustin Brown and Jana at best. And honestly, they're probably going to lowball the guy as well, or give him a fair price, which means that like an 8 cap or a 9 cap or 10. I mean, that kind of deal, I want to be double digit return, and I want the guy to sell the financing.
Yeah, so, they're calling it an 8.12 cap.
Right. And I ain't going to trade an 8.12 for a sophisticated guy like yourself wearing that
no, it's not.
blue sweatshirt, with your I mean, you look way too sophisticated for that. So, Floyd, here's what I want you to do, though, okay? Call the broker, figure out the real pricing, tell them you're a buyer. Don't worry about the money yet. Do you have any money for it that you put in the deal?
Sure.
How much?
Well, 60, 70 easily. If I sell a property I'm clear on, I can easily pick him another 100 grand.
Okay, that's 2.9 million bucks. It's $3 million. If it sells for that, say it sells for 2.5, say it sells for $3 million bucks. 10% would be 300 grand. So you got 5%. And then from the group, if you like the deal and everybody else likes the deal, you go and grab that 10% or 5%. Maybe you work it out with the guy. Maybe he wants to sell it, and you're like, hey, look, I'll put 100 grand down. You still finance the rest of the stuff. The first thing that I want you to do, right? Go ahead.
I'm sorry, I don't interrupt. I'm assuming we needed to go at least 25% down.
Maybe not, though.
Okay.
What does the guy own it free and clear?
I believe so.
See what I'm saying? This is why I get paid the big bucks, because they call me Captain Creative. See, you got to get creative, guys. Y'all are confined to the lines that we were built off of, no longer. So here's what I'm giving you these questions for, because I want you to ask the broker this. Hey, look, number one, I love the deal. Number two, I live 5 minutes from the deal. Number three, are you taking notes, Floyd?
I remember every bit of this.
I hope so, man. I hope you put your ginkgo biloba this morning, because I
love it. 5 miles. Yeah.
No, but no. Look, I'm joking.
That's fine.
I want this. I'm joking with you because I want this to stick.
Yeah.
I really think that 44 units is a great size for you.
Yeah.
You got to call the broker. You got to get him hyped up, because most people who call him, oh yeah, 44 units. Oh yeah, that thing's a piece of junk. Oh my God, the roof ones that need to be replaced. Oh my God, the paint's this. Oh my God, what's the last time the landscape did? Is he going to sell for that? You're going to call me like, man, I'm the ideal buyer.
I bought 2 deals through this broker already.
Oh, well, why don't you just tell me that from the beginning, Floyd?
Well, I've been working with the buyer agent. I really didn't want to go direct. I want to go to the buyer agent. Maybe that's not a good idea. She's not responding to me very well right now.
Well, you on 44 units, you're most likely going to be direct to the guy who's listed the 44 units.
Okay.
So when you do that, just say, hey man, we bought deals together before. I'm a real buyer. Why is this guy selling? And then just play the game. You know the game. Play the game.
Yeah.
And you have the deal. What's the deal worth? What's the debt if you were to go get new debt? And then sometimes you go and get the new debt quote, so that way you can go back to this other guy and say, you know what, man, who's going to buy this for 2.9? Man, how are the operations doing? Like, let the broker kind of work himself backwards, and then you'd be like, man, you know what? What are the other offers coming in at? Sometimes I don't like to make an offer out of the gate. Sometimes I actually like to let the market, the process, meaning. You guys remember that deal last week? It was called Tinsley Park. It was listed on CBRE that Grant was talking about. I got a text message today saying, hey, did you talk to the broker from the group member? And it's like, yeah, Matt's the broker. The deal was going to be listed on CBRE, and they're going to do the whole process. So, like, you guys are like, and I get it, like, we're all excited, but sometimes you guys got to let this process work its course, because what happens is you end up getting a better deal. Like, if you're like, oh my God, can I buy the deal now? Yeah, buy it for $3 million, it's yours. But if you're like, oh my God, I got to look at it, I got to get the debt, I got to do this, what are other offers coming in at, when's the real offer price? And if other people come in and offer 2 million or 2.2 or 2.1, you're like, man, what are the other offers coming in at? Like, see, that's what I do with all these deals right now because the process is helping because there's not a lot of people making offers on these deals because the market is actually pretty quiet. So
this was on the market back 6-7 months ago for a little over $1 million more than it's on for now.
And wow. See, this is the perfect story. This is the perfect story.
Yeah. What was scaring me about it is this is the first big apartment deal I'm looking for. I really started looking for the 1 to 4, like you was talking about.
Yeah.
And couldn't find any of those around here.
Thank God. That saved your life. Just skip forward.
This is the only one I can find on the market at all.
Thank God. Well, buy this one, then you'll find another one. I promise you this, because when you're looking for a pink bug, you're going to find a pink Volkswagen Beetle. You know, when you buy this one, the broker's going to have more deals for you. You're going to see more deals. I promise you, when you get this 44 units on the contract, somebody in this group will do this deal with you.
Okay.
Somebody will help you put the down payment down. Somebody will help you do due diligence. You just got to get the deal. So work your relationship with the broker, work all those angles, but be patient, guys. What I'm saying is be patient as well. You guys got to be patient with this real estate game. Does that help you?
I'm good with being patient. I just needed to know what the possibility was for actually as far as funding the down payment with me.
Yeah. You've already
before
got
I
the money
walked into the conversation. So
no, you've already got the money for the down payment, Floyd. Tell me, you've already got the money for the down payment.
I've already got the money.
Dude, I got the money for the down payment for 4 of these deals. Say that.
All right.
Say it.
I got the money, down payment money for 4 of these deals.
You do. Because in this group, we got the down payment money for 4 of these deals. Who in this group has money to put on a down payment? Put it in the chat box. Just show Floyd. I mean, Mara's raising her hand, Colin's raising her hand. I mean, guys, you please.
So you're talking about crowdfunding it then inside the group.
Well, crowdfunding or a partnership of 1 or 2 people. You could do a group. You could do a partnership with one other person. You guys have 50-50 decision making, and it's not crowdfunded at all.
And that's something you'll help me put together.
I won't help you put it together. You're going to put it together. I already put deals together at Cardinal Capital.
I need to be reaching out to these people individually.
Well, no. I mean, what's going to happen is, Floyd, focus on the deal.
Okay.
Once you have the deal, then you're going to come back on, you're going to pitch the deal, and then you're going to put your info on the right-hand chat box. You can do it right now as you want. And then what's going to happen is once you already have a deal, then you're like, hey, who wants to do this deal with me? It's 44 units. I got to put $250,000 down or $25,000 down. Here's the returns. Who wants to do this? That's it.
Okay.
You're in the right spot, Floyd. You are in the right spot.
I was just assuming that somebody with Cardinal Capital would be involved with helping syndicate that.
No, I'm here as a value add. I help and run the platform with Grant, but we don't set up like docs and everything else. We have our own funds that you can go and look at the PPMs and the operating agreements to get an idea of what it is. But yeah, you'll do all that stuff. Okay, next question is coming from Colin.
Hey man, so can you hear me?
Yeah, I got you loud and clear, man. Go ahead.
All right. So I'm in Indiana right now. I'm only 22 years old, but I'm trying to get started early into this. I have a 20 unit right now, and I underwrote it for about what they were asking for, so I know that's kind of reasonable. And I know that some of my family members will help me with the down payment, but I'm kind of having trouble, like, what kind of pitch, like, what percentage, how do you weigh the percentage of what they're going to get from, like, investing, if they're going to get, like, if it's going to be like a 60-40 split or a 65-35 split, or how do you go about that?
Well, it's encouraging and it's discouraging when I tell you it's all made up.
Okay.
But in life, it is all made up, and each deal is different. What I can tell you, I've done deals where I brought my uncle in, where I found the deal, he put the money in, I got the financing, and I split it with him 50-50. I've also done deals where it was a 75-25 with Grant, where Grant found the deal. You know, I got 75%, he got 25%. As everybody puts their money in, you all get your equity based on how much you put in. and then the split is 80-20, meaning that 80% of the profits and then everything else goes to the investors, 20% goes to the person who's running the deal. The question, and there's a lot of questions, right? So when you guys set up your first deal, you guys just got to go through a little check sheet of like, okay, Colin, how big's your deal?
It's just what that's big, right? It's a 20 unit, and it's right by Purdue University. So
Cool. So 20 units, how much is it?
they're asking 3.5.
$3.5 million. Okay, 3.5 million. The down payment. Just walk through this. So I want to give you an idea of the deal. 3.5 million. How much are you gonna put down?
Well, I heard Grant talking about 30%. That's quite a bit. So I don't really know if it's 30%. It's just right over $1 million.
Okay. So $1 million is gonna be 30%. 25% is gonna be $750. Depending on if you get seller financing, it can be different. If you go and get financing the traditional route, it's gonna be probably 25 to 30%. So if you got to go and get $750 million or $750,000, do you have any money to put in the deal?
Yeah, I do. Just a little bit. Not much.
How much?
As of right now, I have 10.
Okay, so but you're gonna put sweat equity in the deal, right? So you're gonna put the deal together. You're gonna put sweat equity. Who are you gonna get the $750 from?
Well, my uncle, he's pretty big on investing. And
Can you get it from one guy? $750 check, boom.
I don't know. I have about 3 people in mind. So
Okay. So go to those 3 people. Now, if they all have decision, it's not like an SEC thing or it's not a crowdfunding thing. You got 3 people who are going to come in on the deal. Say you got 250, 250, 250. Just tell them. Just say, hey, you know what? I'll do this for you. You guys have your equity based on the amount you put into the deal. We need $750,000 for me putting together the deal. I'm going to have the acquisition fee, which is 3 or 4% because it's a small little deal, right? So it's going to be 150 grand, whatever that may be, whatever that is, and plus I'm going to throw in the 10 grand. Hey, I'm going to run the deal, so we all get our little piece of equity, but I get 20% of the upside on the cash flow and on the exit for putting this deal together. Or if you go to them and say it's going to be a 60-40 or 70-30, it's just what are they willing to take?
okay.
The problem with these small deals is that there's not enough cash flow to make people excited. And so when people don't get excited, they don't invest. So, Colin, you just got to ask the question and say, hey, uncle, like when I went to my uncle and said, hey, you want to do a 50-50 deal? He's like, makes sense to me. You're doing all the work.
Yeah.
If you're going to somebody and saying, hey, they're like, I ain't doing 50-50 with you. I'm going to have to help you, Colin. You're like, yeah, you're probably right. Let's do a 70-30. I get 30% of the upside. You get 70%. I do all the work. Okay, let's do it. So it moves. It's a moving thing. And you guys don't have to have all the documents and everything else. When you get started, you want to go and ask people, hey, if I can do this deal, if I can get you X, would you do the deal? And then that's when the whole thing starts.
Okay.
But we're getting pretty far advanced. Like the most important thing is going to actually get in the deal, because when you go to your uncle or when you go to somebody else and be like, hey, you want to invest? What you want to do is you want to show them the deal. Hey, here's the deal. Here's how it works. Here's the cash flow. Here's this. So that way you're not just having conversations. Like I didn't go to my uncle and say, hey, man, if I found a 4+, if I found an 8+, would you do this? I went to him with a 4+. I said, hey, look, it's 200 grand. I need 150 or 50. I forget what the deal was. It was like 100 grand down. I said, would you do this deal? And I'll split it with you 50-50. And you get 800, I get 800. And he's like, yep, I'll do it.
Okay. So what you're saying is just kind of if you can get kind of one person in it, so you're not really losing a lot, or.
Well, the reason I said if you get one person on the deal, what's cool about that is you don't have to deal with as many people.
Okay.
And also it builds up this thing where it's like when you go to one person and they want to do it all, it's like, dude, that deal was great. Yeah, you pitch the deal, you like the deal, so that way when you go to the number 2, number 3 person that you were talking about, you're like, hey, I went to Uncle John this weekend. He did the whole thing, man. He wanted to do the whole 750, which shut you guys out because I was going to come back to you guys for number 2 position. But hey, let me tell you this: Uncle John took the first one. He drained out his full IRA. I got deal number 2. Now you want to do this deal? You guys see how this comes about storytelling as well? Like it's all about storytelling. Like you gotta get people excited about this real estate, because over the generations, this is how people have created wealth. It's because they found really, really great deals and they found really, really good cash flow, and it's long term, and they've been able to take people's money, put it into deals, and so that way the deal's working for you and them. And 20 units is small, right? So Colin, you're gonna have to be managing this more, so just be prepared for that. But I do like the size. Go and find the deal. What's the cap rate? What are the real numbers? What's the real insurance? What's the real taxes? What's the real debt quote? Go and get all that information and then submit an offer.
Okay. Alrighty, thank you.
Yeah, of course. Thank you, Colin. Great question. Mara, you are up next. Let's see here. I'm going to unmute you, and I'm going to go to Carla.
Hi there, Ryan. Thanks for taking my question.
Of course. Good to see you.
Good to see you too. I'm from the Boston area, and it's kind of more of a general question. It's not to a specific deal, but being in the Boston area, I kind of feel like the market is becoming saturated. There's a lot of new builds. And my question is, what would set you apart from others in a saturated market, especially if the land is like completely maxed out, so you can't, add really any other amenities. You don't want to take away units to have amenities inside, like a gym or pool or whatnot. What do you do to set yourself apart?
How many units is it?
Well, this is a general question. As I look at, these deals and I see more and more, new builds out there, I'm just wondering what happens in a saturated market.
Look, what happens is that it becomes a commodity. It becomes where people are moving just to save $50, $100, $150, $200. So you got to be, look, when that happens, you just got to get conservative. But I wouldn't worry about that. If you're in the Boston market and you find a great deal, a great asset, Boston's different than Florida. People want pools in Florida. People don't always want pools in Boston because you only use it for half the year. So what you're going to do is you're going to look at locations. Number one, that's probably the most important thing in Boston. Boston's a very clean city. Number two, the quality of the construction. Number three, the cap rate, the going in cap, and then your debt, which is going to actually ultimately give I said this throughout this call several times, is the cash flow to the investors. So are you looking to buy, is this your first deal or have you done many?
Yeah, this would be my first deal. I was actually just looking at something that's a new build.
Okay.
But it seems fairly expensive. 26 units for $12 million. So I haven't got into it too much, but it just seems very expensive.
Well, it does compare. So you said how much for how much?
Say those.
It's 26 units and it's 12 million.
Okay, so $12 million divided by 26 units is $450, $460 per unit. What's my next question going to be?
Well, it's a new build, so it can't be why you're selling.
Well, no, that's not my next. My next question is, well, what are the rents? Because when I look at 460, the rents have got to be $4,000 or 3,900 or more. You know what I mean? Like whenever I look at the per price, I'm like, okay, how big are the units? How much are the rents? Because these could be like little homes, and everything around it could be $2 million, $3 million in Boston. The price per unit doesn't scare me, guys. It's the size, the quality, the location, and the people who are living there. Because literally, Grant and I went and shopped 3 deals in Atlanta. We were there for like 8 hours. The first deal, we're like, this is cool. This is great. This is awesome. Smaller units at average $750. Second deal we went to, we're like, wow. The people who were walking in, the cars were different, the animals were different, the the whole vibe, they had the scented candles, they had that whole thing. And we're like, okay, well, the rents have got to be different. And they were. And so the rents were different. The building was worth more. So all of that changes. And as you guys start to look at these deals over and over and over again, what sets you apart is the location, the quality of the build, how long people are staying there. Because if your renewals are 50, 60, 70, 80% plus, it means that people want to stay there. And when people want to stay there, people will be willing to pay more. Maybe it's next to a park. If you have buildings who don't have a lot of amenities, there's a reason why. They don't have any space. New York's famous for this, right? New York has no amenities. The buildings have this little gym. I stayed at this condo in New York, had a little gym that was in a basement. I was like, this is depressing. Nobody would list this on the brochure. But you got a location which is right next to Central Park, and that trumps every amenity in the building. So again, don't get stuck on that. What sets you apart? Get stuck on how do you go and find a really, really good deal and buy like 10 of them. Because over the next 12 to 18 months, you could actually do it.
That would be awesome.
Yep. I hope that helps, Mara. Next question
Thank you so much.
from Carla. Thank you.
Hi there. Thank you so much. I'm excited. So I'm new, and
Okay.
Just a question. So I'm working up my first deal, doing underwriting on it. It's a 6-plex, 12 unit, just a small. I'm in Northeast Ohio, in between Cleveland and Pittsburgh.
Great. Okay.
Great area, Yep. So I have the rent roll. I was able to figure out NOI, cap rate, all that good stuff. The rents are appropriate for the price per door. What I'm struggling with is, this would be my first deal.
Okay.
Where do I go to look for, lenders? Like, where do you suggest? Because I can't make the figures work until I have that aspect.
Well, is the deal listed right now?
It is listed. So here, I called the broker last Sunday, but I called him about a different deal. So I had all these questions for a different deal, and I come to find out the guy wasn't going to negotiate at all, and it was overpriced. So hey, I have this deal. So I started checking it out, but I didn't look at it enough to ask him that many questions. He just said the guy's tired of renting. There is room to negotiate. So I have room to negotiate on this deal. But how do I feel like I need the lending piece to know if it's a good deal. Do you know what I mean?
Well, yes, I do. So just to address the lending piece. So what I would do is on 6 units, or because you said it's 2 6+s, right?
Yeah. So 12. Yeah.
Who's the current lender?
I don't know.
Find out.
Okay.
You just look it up and ask the broker who's the current lender. That would be great.
Okay.
Mandy says I can connect you with lenders in Ohio. Her number is 531-739-4710. But you're going to want to go.
Oh, okay.
Yeah, typically these regional banks, they would loan on this type of stuff. Also, I don't know, Freddie. I don't know how big is the deal. How much is it?
$750 is what they're asking.
$750.
But I know it's negotiable. He said it's negotiable.
Yeah, so you can go to like a mortgage broker that does like a Freddie loan, and they can give you a quote on it as well. But I would call the brokers and reach out to some different brokers and be like, hey, who do you know? Who's the best guy to do this in this market? Because you want people who are familiar with that market. Like if I gave you my Florida guy who does 25 units, he'd be the wrong guy because he does Florida. Like you want the guy who does Cleveland and Ohio and all that stuff, so that way you have that pocket. But regional banks are good because if you have a relationship with them, you can put deposits in their banks and they'll give you a great loan.
So I personally deal with a credit union, and it just seems like they're not going to play ball.
They're bulky. You want to go to like a mortgage broker who does like these small loans, and tell them to see if Freddie's $5 million and lower program. Freddie would do a loan like this where it's like I'm trying to think of the word for it, but it's like the rents are lower, it's workforce housing. They really have strong programs. The small some of the SBL program, Mandy. You should connect with Mandy.
I will call her. Yeah, so I did reach out to, like I said, just to my credit union, and they told me like 6.5%, and 20% down, 30-year. So I don't see how I could do a 10-year and make this work.
Right. Well, let's start with the deal, right? So it's 12 units. How much do they want per unit?
It's $62.5 a door.
Okay. How much are the rents?
$612 a month.
Yeah. Okay. What did you buy?
It's in line.
Yeah. What did you buy it for?
I don't know. I have to figure out how to find that out. It's in a different county than I live in. I know how to find out in my county. I don't need to find that out.
What's the address?
1996.
Hang on. Let's put it in the chat.
Yeah, tell me how to find out.
If somebody could look this up for our friend. All right, put it in the chat box. I gotta have my co-star open, so I'm gonna rely on somebody else.
All right, I'll put it in there.
Yep. So put it in the chat. But the thing is, find out what he bought for. You can ask the broker as well. What did he buy for? Why is he selling? I understand he doesn't want to rent it out anymore. Does he have a loan on it? Because if he doesn't have a loan on it, maybe he could do seller financing.
I think I found the owner, Havelock Properties LLC, and there's 4 guys in it, so I did find that out. I had to search and search. The Mahoney County.
Chris is going to look it up. Chris is going to look it up for us.
Okay.
So it's 1896.
There's 2 properties. I just gave you the one address.
Yeah, that's fine. He probably bought them.
They're identical next door. I drove past. I went through it. It's in a nice area. The only concern is that it's on this circle, Wilson Circle, and there's all apartments around it. So I don't know an opportunity to raise the rents because
probably not.
I mean, you would think it's 612, but I should be able to raise it some. But there's so many apartments around it, like it's just that's why.
But it's not always the case. You can't always raise the rents as much as you want it to be. and you're also gonna have to put in some vacancy. And you're also gonna have to put in some work in these properties. He's probably selling it because it needs all new toilets, it needs all new paint, it needs all new carpet. He probably won't have money for it, right? So it's 12 units times 600. Because see, here's the problem, right? Is it's $7,200 per month. That's the max you can get on that deal currently right now. But per year, you can get $86,000, right? That's $86,000 at $600, 12 units. You got to put some vacancy in there, so put 90%. Be conservative, 77,760. And then what are your expenses up there? Do you think you could run it for like 30%?
He gave me a P&L. I got the rent roll for 2022. Their expenses are 36%. I got the whole thing for the P&L for 22.
Okay, what's the ROI?
$52,000.
$52,000. So $52,000 divided
by the 750, I got a 6.9% cap rate.
Yeah, see, it's not. You need a higher cap rate for that deal. It's 12 units.
Yeah.
The only reason you're buying this thing is to get some cash flow.
Right.
Like this deal will probably trade for a 10 cap. It wouldn't shock me. Like
Why do you say that?
Because it's 12 units. When was it built? 1967. 1977. Probably needs a new roof. Probably gonna have to put money into it. It's not. Again, you want to have some cash flow because your exit's going to be like to the next guy. He's not going to buy. I mean, I just bought a deal in Tarpon Springs, which is in Tampa, for a 6 cap, but it was built in 2020, 3 stories, elevators, concrete on the slabs, good brand new wood. Like, you see what I'm saying? Like, at a certain point in time, you want to start figuring out what is the actual proper yield for an investor like you to go in and actually work this deal. Because at a 10 cap, now you're like, okay, well, me and a couple other partners, because see, I would go and just do this deal, and what he would say is if you get it at a 10 cap, it's got $52,000, right? 52 grand.
Where do you come up with 10? I'm just curious.
I just made it up.
Oh, okay.
That's what I would want. I would want to get paid 10% on my money if I were to buy this deal. It's 12 units. You see what I'm saying?
Right.
So instead of he came up with a 6.9, he came up with a 7, and I'm like I'm gonna go back to Tampa for a 6 that I don't have to run. Because see, on 12 units, you got to run this thing.
Yeah.
So I came up with a 10 because he probably doesn't have it in their property management. He's probably running it himself. So if I came up with a 10, the deal's worth $520,000 divided by 12 units. Not all of them are going to be rented. It's $43,000 per unit. You can go and get somebody in this group. You put how much money you got down to put down?
I've got myself and a partner to put the money down.
Yeah, how much do you got?
I got 20%.
Yeah, but could you find somebody to come up with $500,000? And just buy this thing all cash?
I'm not sure.
Okay, maybe if you want to get this deal, maybe if you're gonna make an offer on this deal and you end up getting it for $500,000, maybe somebody lives in your area in this group and they're like, hey, I'll put $250 in, or I'll put $200, I'll put $100 in, or you go get financing. Maybe you don't put debt on this deal. Maybe he doesn't have a loan, he does seller financing.
Okay.
So this is where you start getting creative. But first you want to figure out the price.
Yeah.
At 6.9 cap for 12 units in Cleveland, Ohio. That's older. That's built in 1977. It's got old pipes. It's 40 years old. It's 30, 40, 50 years old.
Yeah.
So like this is where the reality starts to come in, where it's like, okay, at what deal is it a good deal? For you, okay, what a good deal if it's like a 9 cap or 10 cap, it's like 45 per unit. He probably bought it for $20,000 a unit. You understand that, right?
Yeah, right. Well, and he's a property LLC. I'm guessing he has other properties as well. So he may have a property manager. Is it appropriate to ask if that property manager would, stay on and do it for me? I mean, like, is that?
Yeah, everything's appropriate.
Yeah.
The things that aren't appropriate, the times you don't ask. Hey, who's the financing? Who's the debt? Oh, there's no debt. What do you do seller financing? Hey, who's going to buy this deal? When are offers due? What offers are coming in? How long has this thing been on the market? Man, I'm the perfect buyer for this thing. What if I can't get to $750? It's negotiable. Great. If it's negotiable, the first thing I would ask is like, would he be offended if I offer him $450 cash right now?
Wow. Okay.
And just be quiet. I mean, what's the difference?
Oh, I don't have a problem asking that question.
No, I'm just saying. Even at 450, because you see how I went down. Even if 450 is too low. Wow, there's no way he would do 450. Okay, what if I bumped it $50,000? Would he do 500?
Yeah.
Oh my God! I just think he would keep it. What would you not be offended by? What's your lowest offer that you got? Oh, well, there was offers at like 575 or 565. And again, I'm just role playing this.
Right.
This is the surprising thing right now where see, look, somebody looked it up. They bought it in 2015. Let's see here. If you look under King, King, somebody sent this to me. Somebody could just post it in the main chat, so that way everybody can see it, and our friend Carr can see it as well. That'd be great.
Where?
Let me just see here. I was trying to find where it said
Not
this.
the
It looks
latest.
like transfer date 2015. I'm getting so many messages. It pops down. Recorded date 2015. Quick claim. Buyer have
Yeah, I bought property.
blog.
I got, yep,
Sell amount 98 grand.
98. In
Well,
2015.
last arm's length transaction was in 1991 for 98 grand.
In 1991?
That's what it says. Yeah.
Oh.
But it could have traded again in 2015, which it sounds like it did. But I don't know when let me see if somebody else put it in there. If somebody could just repost
So when
that.
I'm doing the property search on that address, I'm just getting one unit. So I don't know if they separated them. It's weird. And it's a different owner
Uh-huh.
on the auditor on the auditor website.
Yeah. Yeah. Yeah, it might be. Who knows? But you could find out. I mean, it's local. It's probably trying to get. And again, it doesn't matter. Honestly, you're just trying to find out. And that's just because you can get a kind of a gauge of why he's really trying to sell. Maybe he's trying to free up 50 grand or 100 grand to go do this next project. Maybe he's sick and tired of managing 12 units. Trust me, 12 units you will have to manage them. There will not be a property manager built
Really?
strong. Talking to look, 12 units.
What's the minimum to get a property manager?
Well, to get a good property manager, I always say it's like 40, 60, 80, 100 units, because for every 100 units, there's a rule of thumb in multifamily. For every 100 units, it can support one full-time staff member, one full-time leasing and one maintenance guy. So if you have 200 units, it can do 4. So one person for every 100 in the front, one person for every 100 in the back. So, like if you have 50 units, it can only support half of a leasing and half of a maintenance guy. At some point in time, it starts to, you have to do third parties and call this plumber. There's nobody there full time. And the breaking point for everybody on this call is that when you get to 100 units or 200 units, that is one of the biggest and best game changers in this world, because the first question came was Ryan, when you sold, because I had 21 units, just so everybody knows, on this call, if you don't know my story, I had 21 units. I'm actually in Scottsdale this weekend. This is where I spent 15 years. But when I was 25 years old working for the airline, I bought a 4-plex. Then I bought a 8-plex. Actually, I called the neighbor next door and I'm like, hey, you're picking weeds out there. He's an older guy. Would you do seller financing? And he agreed to that. Then I bought another 4-plex and a couple of houses, and I ended up with 21 units. The problem that I found personally was that I was going from an airline pilot to a property manager because I couldn't find anybody. You're paying them 10% of nothing, right? Because usually they want 10% of 100 grand or 90 grand, which is 9,000 per year, which is $800 a month. It's not a lot of money, right? So I found that I was being a manager, and people were calling me and they were complaining and they were late on rent. They were doing this, da 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 da. Now again, I'm not saying that it's bad, because everybody's got to cut their teeth and you got to build your equity. But as soon as I was able to build up enough equity, because I put 25 grand down here, 50 grand here, 100 grand here, I had $500,000 in equity when I sold everything. I paid the tax. I had 400 grand, and that's actually the deal that I partnered with Grant on, which was 75-25. I got 75. He got 25 for running the deal. But it was like it was like a 60 or 65 million dollar deal in Nashville, Tennessee, which was 826 units. And those 826 units, they supported 4 people, 5 people, 6 people on each property. And then what happened was then you had a regional manager, and then you had a VP of all that. And so they then reported to me, because when I joined the Cardinal Capital team, I was helping Grant run point on all that stuff. And so I went from 400 grand in 21 units to 400 grand is like 2 or 3% in 826 units. But my life got different. My life changed because now I was no longer dealing with leases and tenants and the term rates and all the issues. I was now dealing with okay, what's the CapEx projects? Okay, I'm approving the budget. Okay, I'm doing this. And it was just a bigger game. And so that story wasn't to discourage people, because that 400 grand turned into 1.2 million because it was on a bigger deal. We sold it in 4 years. We bought it for 60. We sold it for 90 million. I had 1.2 million bucks, and I rolled that 1.2 into a 50 unit in Austin. But I say all that because if you guys have to cut your teeth right now to build equity, do it. If you have to buy a 12 unit to pick up 50, 75, 100 grand, just figure out that game plan and go in. Because remember, you do make a lot of money when you buy stuff. And if you can buy it right now where the debt's high, this 12 units, and then you can go and flip it for 650 or 700 where that guy wants, then you can pick up 150 grand. And now you take your 150 and you buy a bigger deal, or you invest in a bigger deal. And so this is how this game is played. So great find. I think that if it's close to you and you want to manage it and you want to do sweat equity, just negotiate the price to where you feel good about the cash flow and make an offer.
Okay.
But you have some resources. You see how this works, though, guys. Like you guys have some resources in here where now she knows.
I need to write some of these numbers down, but yeah.
Yeah. Like Mandy was like, "Hey, I know dead people, and I know dead people in Cleveland. I know like that's the power of a team." Not people going and making offers on her deals, people partnering with her saying, hey, look, I've got a debt person there. I looked at that deal and you should look at this, And the goal in this group is to encourage each and every one of us to keep doing deals, and because there's enough deals out there for all of us. So
no, I appreciate all that's great information. So, I mean, I'm not really thrilled about doing the sweat equity piece, but I don't know any other way to get started.
Right.
Just to get started. I mean,
yeah. You either have time, or so look. There's typically a couple different pieces in these deals, right? You either have a lot of time and you're looking to build sweat equity, or you have a lot of money and you don't have time. And so people who have no time but have money, they usually find a person like Grant or myself or you or whoever's in this group wants to go put deals together, and they invest with you. Versus if you don't have $1 million or 500 and you want to get rich and you want to create wealth, then you got to go out there and put deals together, and then you have to add value to them so you can sell them for more and make money in this game.
Okay, great.
Because nobody wants to do it. I didn't want to do it. I actually thought I did. I was like, man, I want to do this. I was young and I was like ready to go. But you get to a certain point where like, okay, I don't want to manage a 40.
I really don't.
But unless, so here's the solution though, right? Go and buy 120 units. Go and find 120 units or 80 units or 100 units that you can put together, raise money from the group, put it all together where you're like, hey, I can now have a full-time manager leasing and a full-time maintenance person, so that way the deal's bigger, so you don't have to be the manager and it supports one.
Okay, great. Thank you.
Yeah, of course, thank you. Keep me posted, okay? Okay, guys, appreciate each and every one of you guys jumping on the call. Today is Friday. I can't believe it. Only 2 days until Monday. I can't wait. Next Wednesday, we have got the Pitch Your Deal. Veronica, back me up with this. I know we've got Wednesday call, Friday call next week. The Bring Your Deal workshop is when?
The week after. So it's 23rd and 24th. So we're packed. So we have the Wednesday call for the club. We have the Friday Q&A that it's everybody from the club, from the mentoring, and the last call for everybody that purchased the REI. Then the 20th and the 21st, we have the interactive event, so everybody that's on here is getting that event. And then the week after, on the 23rd and the 24th, we have the Break Your Deals. So we're going to be busy. Busy, Cap. We have a busy schedule.
Yeah, thank God. And busy is good, so I look forward to seeing everybody at the Bring Your Deal workshop. If you guys haven't already submitted your deals, Veronica, did that link already go out? One deal will change your life, but also what happens is it changes your family life well. So I want to get you guys your first deal. I want to help you guys get your first deal, and the more time we spend together, I assure you that you will be more confident to do that. So what else do we need to cover, Veronica? Anything else?
So this is the end, the part 1. So I hope so you appreciated this value. And minimum what you can do is subscribe, share, comment, and see you in the next podcast. So with you was Alexei Natenkov, and I hope so you appreciated this value what I provide for you. I hope so you connect with me, connect with people, successful people, be around the successful entrepreneurs and the good investments for everyone. See you in the next